Greetings to all. It's me, Dr. ANTHONIAMMAL, Assistant Professor, Department of Business Administration, St.Joseph College of Arts and Science Autonomous. And let me start with a interesting fact. Did you know that Flipkart started with just $6,000 in funding, and now it has been worth of billions? So we have to thanks to venture capital. Here, simply we can say the purpose of venture capital. It helps startups and early stage companies grow by providing funding in exchange for equity. So, we have to understand what is venture capital. The term venture capital represents financial investment in a highly risky project with the objective of earning a high rate of return. It is nothing but it is a form of financing that provides funds to early or the emerging company which has a good potential growth. So they encourage the risky project, that is the project which are highly risky in nature. So the main objective here is to earn a high rate of return. So the venture capital is they take the risk of investing in startup companies with the hope that they get a good returns in the future and they can be successful. So next one is the features of venture capital. First one is high degree of risk. So the venture capital represents the financial instruments which are very risky. So the main objective is to earn a high rate of return. Not all the capital will experience high risk, but the venture capital financing usually it contains risk, but the risk is compensated here with a higher rate of return. So next one is financing new ventures. Here, the venture capital, it is the convenient source of raising finance for the startup or early stage business. So, the new ventures face the difficulties in raising the capital from the capital market in their early stages of operation. So, the firms with the highly innovative project and a higher growth potential are easily able to attract the investors who are willing to do the investments for the sake of higher return. And the next one is equity participation. Here, the venture capital financing is invariably, it is an actual or potential equity participation, wherein the objective of venture capital is to make capital gain by selling the shares once the firm becomes profitable. And the next one is long-term investment or horizon. This type of financing is long-term investment, generally takes a long period to encash the investment in securities which is made by the venture capitalist. And the next one is participation in management. Here, in addition to providing the capital in venture capital, and it will also take part in the business of borrowing concerns and also takes an active interest in the management of the assisted firms. So next one is lack of liquidity. Here, the venture capital investment, they lack in the liquidity nature. That is, these investments cannot be encashed by the investors in the short term. So the venture capital investment, or we can use the word long-term investment, which can be either in the form of loan or it can be in the form of convertible securities. Next one is aiming capital gain. So here, those who provide venture capital, they aim the capital gain. So they want the success to be achieved here by earning a higher rate of return. And the next one is stages of venture capital. So here we have 5 common stages in financing the venture capital. First one is seed stage, startup stage second, third one is early stage, and the next one is expansion stage, and the last one is bridge stage. So first one is seed stage. In this stage, the company is only idea for a product or service. So the entrepreneur idea, he has to convince the venture capitalist that is viable investment opportunity. So in this stage, entrepreneur must convince the investor so how the ultimate product or service and how it will be the successful in the market. So here in the seed stage, venture capitalists participate in other investments on alongside with the investments. And the second one is startup stage. Here in the stage of startup, it will require the significant cash in future. It helps the advertising and marketing of the new product or services to the consumers. And this stage, the companies has completed the market research and has some business plan and they also have a prototype of its products to show it to the investors. So the company brings other investors at this stage to provide the additional financing. And the next one is early stage. Here, this is also called as the first stage or second stage capital. Usually comes after the seed and startup stages. So in this stage, the product or services has been developed and being sold in the market. So this is the first opportunity the investor have to see how the product fast with the competitors in the market. So uh, so funding received at this stage will often go towards manufacturing sales and additional marketing. So this stage the company could also be moving towards the profitability depending upon shares and marketplace. And the next one is expansion stage, and which is also called as second stage or third stage capital. So here the business has already started selling its product or services and needs additional capital to support the demand. So it requires this fund to support market expansion or start another line of business. So here the funding is done for the improvement or for the expansion of their business. And the next one is bridge stage, or it is also called as an pre-IPO stage. We can call it as pre-IPO stage. So the bridge stage represents the transition to a public company. So this is commonly last stage of the venture capital financing process. Here the primary goal of the stage is for the startup to go for public so that the investors can exit the venture and make profit. The business here has reached the maturity and it requires financing to support acquisition, mergers and IPOs. At this stage, the venture capital is to exit the company and they sell off the shares and they earn a huge return of the investment. So the exit of the venture capital allow the investors come in hoping to gain from the initial public offering. That is, we call it as an IPO. And with the conclusion, to sum up, venture capital, it will plays a vital role in the Indian economy by providing startups with the funds they need to grow. Although risky, it has helped shape industries and create some of India's biggest companies. Thank you.